Companies truly minimizing their environmental impact would require tripling the annual investment in clean energy by the end of this decade. That's a massive challenge, but it's also a massive opportunity for investors to reposition their portfolios for this low-carbon future. To discuss the effects of climate change on building portfolios, we're joined by iShares Head of Sustainable ETFs, Sarah Kjellberg, and with MSCI's Global Index Research Solutions Head, Guillermo Cano. Could you talk to us a little bit about the factors related to climate change that are driving the transformation in investing?
You know, at BlackRock, we consider climate risk to be investment risk. So if you think about the physical risks that are associated with climate change, these can have real financial impacts on companies. We've really seen this dramatic increase in both the cost as well as the frequency of these extreme weather events that, is really impacting really everyone in their daily lives. And this is really creating the sense of urgency, both from public and private sectors to act, especially coming out of COP26. More than 125 governments and close to 2,000 companies have made net zero commitments. And to put that into perspective, that represents 80% of the global economy. It's also been estimated that about 50 to 100 trillion is going to be needed to transition and meet these net zero commitments. And this will create really this historic investment opportunity.
Yeah, I would agree with that. I'd also say that one of the keys, and especially going forward into the longer term, is innovation, right? Innovation is going to be very vital as we decarbonize, right? As we transition to this global low carbon economy. The cost of renewable energy decreasing is going to be key. But another factor really is a shift in consumer preference, right? The preference is for companies that are creating sustainable opportunities and that are planning adeptly to transition to a low carbon economy. And that's one of the big risks that we try to measure, right? Are these companies going to have some asset stranding risk, or are they going to be better positioned to transition the way that they perform, create their products or offer their services, or are they going to provide solutions? So along that spectrum, investors are making clear choices.
Well, one of the choices they have to make is how to even get access to this space. And that's really been a problem for a long time. Indexing seems to have really helped that for a lot of investors, right? There are a lot of different approaches here. Talk to us about how indexing has changed sustainable investing.
Again, it's about the investor demand and the choices that are being made out there in the market, right? Indexing allows us the ability to screen out certain sectors, certain parts that have more risk, right? And it gives us the ability to access different parts of different asset classes, right? Such as green bonds. Since many of these sustainable strategies are built on MSCI's indexes, well known like ACWI or World or emerging markets, investors can take a sustainable approach, right? While without drastically altering their asset allocation. And that's an important part of this choice.
Yeah, that's right. And, we believe that indexing has the power to truly transform sustainable investing in the same way that it did for, stocks and bonds. If we think even just a little over 10 years ago, there were just 35 sustainable ETFs that tracked, indices globally. And today that number has grown to 300. And so from, BlackRock and iShares perspectives, we believe that, investors really needed choice. They needed a wider spectrum of solutions to be able to build sustainable portfolios. So, one significant force has been the fact that indexing is really kind of driving down the costs that are associated with, investing sustainably. And this is really allowing and unlocking some of these opportunities for investors to use sustainable ETFs as building blocks within their portfolios.
Well, let's move back up to maybe 30,000 feet here. If I'm just approaching this for the first time, what should I be considering when I'm thinking about adding sustainability to my portfolio outlook?
We believe that climate should be a central theme for all investors. And at BlackRock, we think there are kind of multiple approaches to be able to integrate climate considerations into a portfolio. So the first one is reduce. So this is really about reducing exposure to carbon emissions or fossil fuel related activities. And that's really done by avoiding specific sectors with adverse environmental impacts. And the second is what we refer to as prioritize. So this is really focused on investments that are based on, climate opportunities and risks by investing in companies that are prepared for the low carbon transition. And then finally, target. So this is really focused on targeting specific climate themes as well as impact outcomes by focusing on specific environmental and climate focused themes. And so our goal at iShares is to be able to provide ETFs across this spectrum that really allows investors the ability, to incorporate the climate risks and opportunities into their portfolios to ultimately be prepared for this low carbon transition. So investors can use ESG and more robust climate data to be able to analyze and as well as invest in companies that are really prioritizing and being better prepared and adapting their business practices in response to climate change.
I would agree with that. I would say that one of the key things too is to be able to create a baseline. And by that I mean having the ability to measure the sustainability of portfolios, right? We do that with climate data. We do that with a variety of metrics, our low carbon transition scores, our implied temperature rise scores, and that gives investors a baseline, and it gives them the ability to decide, okay, here perhaps I'm making these choices, but here I'm making these choices regarding sustainability, and this is affecting how I do that, right? Now, again, one of the things that we've seen is that in recent years, index investing has become very, very, broadly spread. And now it's becoming not only broadly spread from the market cap investing realm and factors and other things, but now into sustainability and climate. And that is really important because these are the things that we use to construct these portfolios is all this climate data. Now, once we have this climate data, once they construct these portfolios, we can give them the tools, right, to integrate into their portfolio, to integrate the climate data, integrate sustainability practices into their portfolio, and give them greater, a choice, greater flexibility, and again, to align their portfolio with these climate risks for the long term.
Well, Sarah, Guillermo, thanks for spending a little time walking us through the tools in the toolbox for sustainable investing.
Visit www.ishares.com to view a prospectus, which includes investment objectives, risks, fees, expenses, and other information that you should read and consider carefully before investing. Investing involves risk, including possible loss of principal.